1059 The Region, in partnership with RE/MAX Prime Properties, present On the Market, real estate advice that works for you. Have a real estate question? Call us at 416-335-1059. Tweet us at 1059 The Region or email us at info@1059theregion.com.
This is 1059 The Region. I'm Tina Cortez with On the Market, York Region's exclusive radio real estate show. Our expert and the owner of RE/MAX Prime Properties is Asif Khan. Hello, Asif.
Good morning, Tina.
Now, before we get to our guest today, what can you tell us about the latest report on home prices?
Well, certainly lots of different opinions on home prices, and there's some reports that are saying that they've declined about 20% this year and a further 12% to come next year. However, what we're seeing in the market is not that bad. They are significantly lower than the peak in February. And by that, what I mean is what people were paying in bidding wars and multiple offers in February. It's really hard to compare prices just at 1 month. You have to take the bigger picture. And when you look at the larger picture, Tina, the average price across the GTA is still up 11.7% over last year. So although they've declined from the peak in February, the important thing to remember is they're still going up year over year.
And what type of property are we talking about at this point?
So that's a collective group of properties. The detached homes, the larger detached homes, seem to have taken the largest hit. And in that, there's a couple of reasons. One, people aren't qualifying for those higher amounts anymore. So they're starting to settle for the mid-range or the lower-end properties. Condos are selling a lot more now. So you're still seeing people able to negotiate a deal. Before, you would have to go in 5, 10, 15% over asking. But now you're starting to see a more realistic people buying houses for about 95, 96, 98% of list. And that's typical of what we used to see back, 4 or 5 years ago.
And are there certain areas that are hotter than others right now?
There are. There's certainly hot pockets. I'm hearing a lot of reports that Durham is now starting to see 11, 12, 14 offers on properties. Same with Peel Region. They're starting to see multiple offers there as well. The other thing that complicates things is the inventory level. So right now we're very short in supply. And what that means is it's twofold. One, if prices are going down, people are expected to sell their homes because the popular opinion is they won't be able to afford them, they're going to sell them. But it just shows the strength of the housing market and how much equity people have in their homes. They're not forced to sell them. The job market is really strong right now as well. So there's not a major catalyst for people to sell their homes. Sure, interest rates are going up, variable payments are going up, and the people that are on variable mortgages have been for years, and they know that there's peaks and valleys. So there's not that panic out there in the market which causes people to sell. So there's limited inventory, which is now causing multiple offers.
And what can you tell us about the average price of a home here in York Region, and what are inventory levels like right here where we live?
So York Region, the average price is around the 1.2 million range. So it has come down a little bit. Most of that is due to the higher end not selling as much anymore. And when you're looking at inventory, we have over 2 months of inventory in York Region. Now, that may sound like a lot, but 4 to 6 months is generally a balanced market. And when you have more than that, you get into a buyer's market. So we're still in the seller's market. And the reason it seems like it's a lot of inventory out there right now is because we're used to the last couple of years battling with half a month of inventory. And that has caused significant grief for people in terms of when they're trying to buy, they can't get offers without conditions, they're paying over asking. But now they have some leverage when they're going into negotiations as a buyer in order to get a home inspection in, to get financing conditions in, and to go in with that peace of mind that everything is going to fall in place.
Now, is October usually the peak of the fall market? And if so, what does that mean for the rest of the year?
It does. So October starts to peak around the 15th of the month. And between October 15th and I would say November 10th to November 15th, it's really busy out there. Now this year, there's a couple of complications as well. There was an interest rate hike announced just a couple of weeks ago, and there will probably be another one October 26th. So those are going to come into play. there's a scramble after the last hike for people to want to get into the housing market because they had rate holds. And what that means is they were pre-approved at a certain rate, and as long as they buy within 30 days or 60 days, they can still get that rate. So there's a bit of a scramble, and you're going to start to see, more and more houses sell in the next week or so, and that's because people's rate holds are expiring, and they want to take advantage of that.
And would you suggest then that the fall market is a buyer's market or not so much yet?
Not so much yet. And we're still far away from a buyer's market, although to qualify that, I'm going to say it feels like a buyer's market because it's so significantly different than what we were used to over the last 2 years, which was a complete seller's market. And by that, the sellers could dictate all the terms of what they wanted in that sale, closing date, what conditions they wanted, didn't want, what they wanted to include. They didn't even have to stage their homes. Everything was selling, and everything was selling in multiple offers. So this does feel like a buyer's market. I'm going to tell you a lot of the realtors, well, I would say 99% of the realtors prefer this type of market because, one, it gives them peace of mind. The buyers are protected, and the sellers are still getting pretty decent money.
And what's it like then for you and your clients right now?
It's a sense of calm. I mean, anytime you can get a home inspection condition put in for peace of mind, that's great. Financing condition with the appraisals not coming in when the market was really hot and people were paying $200,000, $300,000 over, it was very risky. So now that people are able to get in their home inspection condition and be able to have that peace of mind that the bank has done their appraisal, as long as you're not going in with 3 or 4 month closings, if you're relatively in a similar market when you're closing as when you bought, then you're going to have that peace of mind that the house will appraise. So there is some calm for buyers and even for sellers. It's a lot of pressure, believe it or not, when you're representing a seller and you have 15 or 20 offers, because you have to pick the right offer, not only in terms and conditions and price, but also you want someone that's going to be able to close on the property. Just because someone's offering you $100,000 or $200,000 over asking doesn't mean that that's the best offer. You have to know if it's going to close. So now that we're able to get these conditions in, it even does protect the seller, because if they're getting pre-approved and the house is being appraised prior to the conditions expiring, you know the house is going to close.
What advice do you have for anyone listening right now, a buyer or a seller? What do you see in the next couple of months of 2022?
I would say be patient. There's a lot of anxiety out there in terms of sellers not thinking that they're getting what they should get. There's a lot of anxiety from buyers wondering if they're going to get a house, what's going to happen when the interest rates go up. We've heard on the show many times when mortgage brokers have said, believe in the variable. So it is going to go up. However, it will come down again as well. So that's usually your best bet. But if you don't like taking risks, then lock into a fixed mortgage. And at 5% or thereabouts, those are still very good rates. I remember when I bought my house, and my first house was at 5.95, and I thought that was a great rate. So now we're getting back to a pretty normal type of cycle, and you're going to see those rates become the norm, and people are going to forget about the incredibly low rates or the free money that was thrown around during the COVID period, and this is going to be the norm. So it's not changing anytime soon, and it's still a great time to buy. If you're a buyer, there's some great opportunities out there right now, and I'm going to throw one more out. Investors. When the market is like this is the best time for an investor to get in. One, prices are a little bit lower on houses, but at the same time, rents are skyrocketing right across the Greater Toronto Area. So this is when you're going to be paying a little bit more for your mortgage, but the rents are going to be able to cover that.
So when you're talking about investors, what types of properties are you suggesting they look for right now?
It depends on the area, and it depends on what their appetite is. There's a lot of commercial properties out there that would be more for the savvy investor, but if it's a first-time investor that's going in, you're looking at condos that you can rent out. York Region has some great little pockets. Downtown Markham. York University is coming up. It's going to be ready next year. There's some new condos being built. There's also some resale condos in there that you're going to be able to get some really good rental income from because the students are going to be coming. So there's little pockets. It just depends on what you're looking at, what your budget is, and then we'll match you up.
And what's your advice then for anyone who perhaps has buyer's remorse or the other person who thinks shoulda, woulda, coulda? What do you want to say to them?
Again, it's just patience. When you're purchasing a property, it's time on the market. You can't just look at it like a stock market where you say, well, it went up today, it's going to go down tomorrow. A house is something that you purchase to live in. And that's the main consideration. The equity, the appreciation, those are after effects of purchasing a home. So, when you find the house that you love, jump on it because you're going to be living in this house. You're going to be enjoying this house every day. And the appreciation, the equity increases, all of that, that's afterwards. And it is going to go up. It's historically gone up. We've never had years and years of depreciation. So, rest assured that you're making the right decision. Home ownership is one of the best ways to save money.
All right. Our check on the market takes us to New Brunswick. That's coming up after the break. This is On the Market on 105.9 The Region. Stay with us.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426. Or email asif@thehomeshop.ca. Now back to On the Market on 105.9 The Region.
Welcome back to On the Market, York Region's radio real estate show. Over to my co-host and our real estate expert, Asif Khan from RE/MAX Prime Properties, as we continue a check on the markets across the country. And today, we're moving east. Asif.
We are, Tina, and we're going to start off in New Brunswick. And we've got Jason Munn from RE/MAX on the line. Jason, welcome.
Yes. How are you?
Great, Jason. Tell us a little bit about how you found the first 9 months of 2022 out in New Brunswick.
Yeah, the first bit of 2022 was amazing. We couldn't hang on to any inventory. Properties were selling in multiple offers continuously, and that carried through for probably about 6 to 7 months. And then in July, we maybe into August, we started noticing a severe pullback. Big changes where, some inventory is actually sitting on market. We're starting to see some price reductions and not near as many, multiple offers, people fighting over them. So as the interest rate continued to climb, we started seeing the results of that on different levels.
And so can we put you on the spot? What do you see going forward for the next couple of months of 2022?
I think going forward for the next couple of months, probably for the next 5 months, I think you're going to see a balancing, a lot of uncertainty. People don't know where they go. So they're just a little bit timid right now, like what to do. But at the end of the day, the rates are still fairly attractive compared to what they were even, 7 years ago. And when prices are balancing and rolling back a little bit, that little bit of an interest rate increase doesn't really mean much if the prices have come down a bit. People still need housing. So I think it's just going to slow up and balance a little bit. But I think there's going to be a busy spring again. I really do, once people start seeing that things, I guess not to overuse the term new norm, but in housing, the rates that we're going to see are going to be part of the new norm, and we still have housing. So just a little bit of shake in the market currently.
And Jason, the new norm is basically the old norm because we've seen these rates before. We've seen inventory levels like this before. How is the psyche of the purchaser out there? Are they pretty confident, or are they still sitting on the fence waiting for the other shoe to drop?
They're sitting on the fence, and then they're waiting for rates to drop. They don't know where prices are going to go. So what I've been doing with here at RE/MAX East Coast Elite, I've been saying, you need to keep things in perspective. Rates were 3%, 3.5% 8 months ago, but prices on things were up, my God, on some things 28, 30%. Now we're starting to see a rollback of up to 15, 20% on certain products, and the rates are 5.5%. but people, they're using, in our market anyway, I don't know about other markets, but most people are mortgaging their homes. So when it comes to a payment, do you pay the excess money to the vendor or the bank? Because if you lower price, a little higher interest rate, traditionally the payments are going to look the same. As you said, Asif, like our old norm, we call it the new norm, but it's like the old ways that we did business before COVID. So chances are the payment's going to be higher interest rate. Even when they're buying a home, we're seeing people upset, but usually they're trading up. The good news is probably going to spend less money now, even though their home's worth less.
Jason, would you describe the current market in New Brunswick as a buyer's or seller's market?
It's still favoring a seller's market. Good houses come on, they sell very quickly. And, in most cases, if they're in the city and it's a good property, they're still selling in multiple offers. Our rural properties outside of Fredericton area are sitting, and we're not seeing the flood of offers like we were. But it is still into a seller's market, but balancing back.
And Jason, what about inventory levels? Are you starting to see them really climb? Is there a mass exodus, per se, of people that may have moved there during the pandemic? Are they moving back out, or are they staying put?
And that's, yes. We had a major influx of people from British Columbia, Ontario, different parts, and our pricing was still, even though we were up, we were still considered very cheap to other parts of the country. We were undervalued for 15 years. So basically, COVID exposed that. That's what happened. And back a year ago, September of last year, we were probably trucking at about about a month of inventory at any given time. Now we're sitting at 2.3 months of inventory. And there are people that came here that are moving back because they wanted a simpler, slower way of life, but maybe we were just a little bit too slow. So you can't get pizza here at 3 a.m.
Jason, if people want to connect with you to find out more about housing out your way, how do they do that?
Very easy. They can call the Jason Munn hotline at 506-260-2605 or visit my website at jasonmunnrealty.com. There's a tab on there to send questions, to send emails, and we'd love to chat with anybody that has questions about the East Coast market out here in New Brunswick.
That's so awesome. Thanks so much for joining us, Jason.
You're very welcome. Nice to see you guys as always, and I hope you have a great day.
Thank you, Jason. When we come back, we move to Nova Scotia. This is On the Market on 105.9 The Region. Stay with us.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426. Or email asif@thehomeshop.ca. Now, back to On the Market on 105.9 The Region.
Welcome back to On the Market, York Region's exclusive radio real estate show on 105.9 The Region. Asif, over to you for our last stop.
Thanks, Tina, and we're going to be going to Nova Scotia, and we've got Craig Snow from RE/MAX Nova. Craig, welcome back.
Thank you very much. Great to be here.
Craig, how did you guys make out? It was a pretty devastating storm that you had a couple of weeks ago.
Yeah, that was quite devastating. The northern regions and Cape Breton were the hardest hit. And in some of those areas right now, there's still, I believe, a couple of thousand people that are still without power as of today.
Did you want me to jump in? Or?
Yeah, go ahead, Asif. You can ask the first real estate question.
Okay, perfect. And Craig, how is real estate holding out, even with all the storms and the damage? How has the market been over the first 9 months of the year?
Well, one thing that I can say is that the real estate market here in Halifax started off, the first quarter of the year was very strong. The demand outpaced supply. We had a record low number of listings, average listings per week coming on market, and average 30 to 40 offers on each one of those listings. So the market was crazy for the first 3 months. Now in the second 3 months we saw the introduction of interest rates starting to rise. We saw a little bit of a sputter in the market. But it still stayed strong. We were still averaging about 75% of the listings that were coming on the market were still going into multiple bid situation. And then we get into the third quarter, and interest rates now have climbed again, and we're now in a little bit of a slowdown or a little bit of a big sputter. One thing I can say is that, we look at our stats each week, and right now our weekly numbers are showing us that still 30% of the listings that are coming on the market are still selling, above ask price, and about 30%. And generally, the market time, the average days on market now has increased. So I can give you some numbers. The average price in Halifax year to date in the last 9 months has gone up by around 19%. Unit sales, so the total number of sales in our market right now are down around 25%. And right now our inventory is up 58% year over year.
And what is the average price of a home?
So the average price of a home right now in Halifax is $545,464. And if you were to compare that to last year this time, the average price of a home in Halifax was $456,109. So we've seen, about a 17-18% jump there.
And it's pretty consistent with some of the things that we've heard from out west and even in Ontario, where sure our sales are down about 40%. This is based off a very busy year. It was a record-breaking year, I think, all through Canada. So it was pretty much expected that we wouldn't maintain that pace. 40% may be a significant decline, but price continues to climb, and we're up 11.7% here. How do you explain that to people that are, on the news and in the newspapers with these reports about a 12% decline in price or a 20% decline in price?
Well, I think the way we look at it, I mean, Ontario, it's really hard for Halifax to compare its marketplace, to an area like Toronto. But one thing that we've seen is increased demand. So our immigration is growing here in Halifax, and not just foreign immigration, but we're also looking at immigration within Canada, other provinces coming here to Halifax. So I believe that the demand that's still there for homes, and it's still driving the prices up. For us, when we had the big boom in our market there, the first 3 months of the year, we were calling it a correction to our pricing structure that we haven't seen in about 10 years. So we called it a 10-year correction. We were modestly, 3 to 7% per year, very modest. And, when you look at some of the major centers across Canada, we just weren't keeping up pace with the bigger cities. So, snapshot to now 2021, 2022, we've now seen prices rise. And like I say, to say that our average sale price in Halifax is $545 is still a very reasonable price when you compare it to some of the bigger cities in Canada. And, I think, to answer that question directly, Asif, about interest rates having an impact, I think we will see that as time goes on. A lot of the sales, a lot of what we're seeing right now closing that are sales that have taken place a few months ago. So now we're trying to look as the months go on. Interest rates now are looking like they may go up again now towards the end of October. So there's some hesitancy from some people to basically jump into a home until they see what the Bank of Canada is going to do. But overall, though, we have maintained our housing prices. And like I say, we've seen an increase year over year. So we're bucking the system. But at the same time, I think it's just a matter of timing to see how much of an impact these interest rates will have moving forward.
And you said the average price is about $545. What does that get you in your market?
$545 would get you, a nice 3-bedroom, 2-bath in a nice neighborhood. Probably in the 20, 25-year-old range. But it would get you in a nice established neighborhood. And, probably 3-bedroom, 2-bath. That's about what it would get, around 2,000 to 2,500 square feet.
Hey, Craig, what about days on market? Are you guys seeing properties sit around for much longer than they used to before?
Yeah, so I tell you, right now, and this is a snapshot that I printed off for our conversation tonight, our average days on market now is 25.4. Last year it was 29.6. But I think this is going, if we do a snapshot a month from now, I think we're going to see the average days on market continue to rise. I can see it probably getting up to 70, 80 days on the market. That's what I'm projecting, sort of forecasting right now, that I think the average days in the market rise. But as of today, this was printed off as today, year-to-date residential stats, so about 25.4 average days on the market. And right now, we have 2.7 months of inventory. Compared to last year, we had 1.7 months of inventory on the market. And the sales price to list. So today, the average sale price to list, the average is about 10.5% over list price. So again, Asif asked a really good question. Why are we seeing prices rise? We're continuing to see them moving upwards. I mean, this is a snapshot of today, and year to date, in the last 9 months, we've seen about a 10.5. We're still seeing about a 10.5% increase on offers over ask price. So it really is bucking the system. The demand is very strong out there still.
You said earlier in our conversation that Nova Scotia experienced a housing boom earlier this year. Have you ever seen anything like this before, and do you think you'll see it again?
You know what? I've been in the business 23 years, and we are lucky enough and fortunate enough to have agents in our office that have been in the business 35. One agent around 35 years, one about 40 years, and neither one of them or myself has ever seen anything like this before. So it was history. It was hard for agents to price homes because there just was no rhyme or reason. You know, they were doing market evaluations like any real estate agent would do compared to other homes and what they've sold for. You put it on the market, and then, seeing homes listed for, $599, selling for $100, $200, in some cases almost $300,000 over asking price.
And Craig, you touched on this before, but over the COVID period, you had a lot of people from across the country moving to Nova Scotia for the larger lots, the oceanside views. And have you seen, now that with businesses getting back to in-person meetings and people getting back into offices, especially in the GTA, have you seen a lot of them move back, or are they still hanging on to their properties in Nova Scotia?
Yeah, you know what? That's a good question, Asif. The majority of migration came in from Ontario. Most of the people came in because they were the ones that created a lot of the bidding wars. They were selling their homes in a market where, they were probably averaging $1.5 or $2 million on a sale of their home, and they were coming down, and instead of buying one home, they were buying a home and a cottage, an investment property, for the same money that they sold their home in Ontario. But the majority of them, are staying. A lot of them are professionals. They're able to work by Zoom now, home offices. A lot of them just early retirements. I mean, they're in their early 50s, early 60s. They've decided to retire here in Nova Scotia, and we still have quite an influx of people coming in from Ontario, Alberta, and BC.
Greg, if those people want to connect with you before they head out there, how do they do that?
If anyone wanted to get a hold of me personally, they can call me on my cell at 902-499-7886. My email is Craig, Craig, at craigsnow.com, or they can visit our brokerage website at remaxnova.com, and we have 230 amazing agents that are there to help and serve clients right across the country.
Awesome. Thanks so much, Craig, and we'll see you soon.
Thank you very much.
Asif, what is your sense of how things look on the East Coast?
You know what? I think they're pretty bang on with what's happening across the rest of the country as well. I think there's going to be a bit of a spurt just before and after the next interest rate hike is announced. I think we'll probably go into the Christmas lull somewhere around early to mid-December. And I really do believe that next spring is going to be busy. People need a few weeks or a couple of months for things to settle in and for them to digest the changes. And then once it becomes the norm and things aren't changing, the buyer confidence is going to come back. I can also foresee maybe a 0.25 point decrease coming in the spring as well. And I think that will really kickstart the market. And there's so much demand out there. There's more demand coming. We don't have a lot of new construction happening right now. That's going to put a lot of pressure on resale. And we're already starting this, as we stated earlier in the show, we're starting to see bidding wars and multiple offers come back, Tina. And I think it's going to be a fairly busy fall and an even busier spring to kick off 2023.
All right, we'll keep watching. As a reminder, if you have questions for On the Market, hit send anytime to info@1059theregion.com. But Asif, if our listeners prefer to contact you directly, how can they do that?
And then they can reach me at 416-985-CON. That's 416-985-5426.
If you missed any part of our show, go to 1059theregion.com or wherever you get your favorite podcasts, including Apple Podcasts, Spotify, Google Podcasts, Amazon Music, and Audible. I'm Tina Cortez. Thank you for listening.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426. Or email asif@thehomeshop.ca.